Welcome to Supply Chain in around 60 seconds and our special series on Scope 3 emissions in the supply chain. You'll be surprised to learn in this episode the history of sustainability standards and why maybe the requests for reporting are coming from your CFO's office. Thank you for watching. We have to go back to 2001 when the International Accounting Standards Board developed the IFRS, the International Financial Reporting Standards. This is really the beginning of the ISSB, and why a lot of your reporting for sustainability coming from supply chain will be requested by either the CFO or Chief Financial Controller or whatever title you have for that particular position. If we go through the timeline, I think it better explains it. So, as we said earlier, 2001, the IFRS accounting standards are created. Their purpose is to standardize accounting and financial reports from listed companies around the world. But what turbocharges their adoption in so many jurisdictions, over 140, some reports over 160 around the world? Well, it's this separate group, the International Organization of Securities Commissions. They endorse the IFRS standards and then, like wildfire, they spread around the world. The IFRS then developed the ISSB in 2021, and, history repeating, the International Organization of Securities Commissions endorsed the ISSB standards along with the IFRS accounting. So, in 2023, and this is probably about the time you start hearing requests for this reporting, or you start hearing murmurs that this will be something required in the very near future, the ISSB standards begin to be rolled out. Now, it's 2024 now, which I appreciate, which is why the noise around these reporting requirements is beginning to get louder and louder. It's expected then, come 2025 and into 2030, that the reporting will go from voluntary to mandatory, and it will go out of the space of listed companies and into the private enterprise. We're seeing that already today. So, in summary, we have the IFRS, the standards here for reporting of accounts, so balance sheets, P&Ls, income statements, and so forth for listed companies, being informed by the ISSB. This information then appears in listed companies on all of these different stock exchanges, and the IOSCO is therefore encouraging more of this combined reporting of the ISSB and the IFRS. And we know this because the two boards of the IFRS and ISSB have outright said that they want to see connectivity between financial statements and sustainability-related financial disclosures. Thank you for watching this episode, and stick around for episode 2, where we look at the definitions of Scope 1, 2, and 3 with a particular focus on Scope 3. The devil is in the detail, and we've got to give the devil his due, and Scope 3 certainly needs a lot of attention. We look forward to seeing you in the next episode.